Hello, good evening. Hello. Hello everyone, good evening. Can you hear me? Am I audible? Can you hear me? Hello.
Yes, sir, you are audible. We can hear you.
Okay. So, number of participant is 12 now. Will it increase gradually?
Little bit will increase if we wait next 5 or 10 minutes.
Okay. It's now 7:08. We shall start 7:15. Okay. So then we will start. So let's wait 7 minutes more.
Okay, sir.
Hello. So let's start. Today we'll start our chapter 2. Last class we started chapter 1 and being close to the finishing line, but my online was disturbing, but I rejoined about 10 minutes later, but you all already exist. So I waited for you, but you didn't join. However, so this was a few last slides remaining. I will repeat if I get chance after this class or any other classes after finishing regular slides or regular chapter. But the slides we missed is minimal. Hope you can cover it and all about theoretical issues. Today we'll discuss about management information chapter 2. It's a sequential chapter. Its aligned chapter is chapter 3, chapter 4. It's aligned chapter. We will discuss on one by one. So this chapter we will discuss about identifying direct and indirect cost for cost unit and most importantly the inventory valuations. Inventory, one of the most important part of business, and its valuation also very important. That's why we will discuss inventory valuation in this chapter. So in the examination, candidates, that is, you may be required to classify cost as direct or indirect and calculate the prime cost of cost unit. You may also have to calculate the price of materials and the value of inventory using under different methods of inventory valuation, like first in, first out, last in, first out, average price method, and so on. First slide is identifying direct and indirect cost for cost units. It's the write-up is showing little bit of small because a number of line copied in this slide. Can you read these lines or sentences? Hello?
Yes, sir.
Okay. So direct material cost. Direct material cost is nothing, all about material. Those are becoming part of cost units unless it is used a negligible amount and or having negligible cost. So direct cost, basically cost that are involved directly all materials become part of cost units. But one thing need to consider, the value of material, if it is very much negligible and having value of negligible value, that cannot be treated as direct material. But if you treat it as a direct material, it not be wrong, but it is not logical. As we know, accounting is not a rocket science. Everything we treat here with logic. If you can give better logic than another one, your logic may be preferred. But of course, it should be verified or it should be convinced by others, of course. Your logic should be convinced to others also. So direct material costs are charged to the cost unit as a part of prime cost. Example of direct material are as follows, like component parts or component or parts or other material purchased for a particular product, service, job or order process. Primary packaging material like carton and boxes, material used in negligible amount and or having negligible cost can be grouped under indirect material as a part of overhead. Then direct wages. As we can say, the wages we incur to prepare a product or to deliver a service which is directly related with the production or delivery of service. So direct wages are all wages paid for labor either as basic hours or overtime. Whatever the payment made for, it can be overtime, it can be regular hour, it is direct wages that can be identified with the cost unit. And we can identify direct wages with the cost unit. Direct wages are charged to the cost unit as a part of the prime cost. Example of groups of labor receiving payment as direct wages are as follows. Workers engaged in altering the condition, conformation or composition of product. Sometimes we have a misconception that only direct production, only the workers, those are paid for direct production of units of goods, they are direct labor only. But sometimes we need to alter the product, it also be treated as direct labor. And another important thing is we may produce or we may need some special product that may be generally not required, like a special design for your home decor or a special design for a special machine for preparation of a special product. So in that case, special expenditure also treated as direct wages. Say for example here, inspector, analyst or tester specifically required for such production. And other direct expense includes direct expenses are any expenses that are incurred on a specific cost unit other than direct material cost and direct wages. So direct expenses are charged to the product as part of prime cost. The cost of special design, drawing or layout for a particular job, and the hire of tools of equipment for a particular job. If we hire any specific or particular job, as I said earlier, it is also be treated as direct cost. Now come to the indirect cost. Indirect cost also said by overhead, or we know it's as overhead. Generally, overhead is known as indirect cost, are those costs that cannot be traced in full to a specific cost units. We never can trace indirect cost or overhead to the specific cost unit. For example, a motor garage carries out a repair job on customer's car. So the direct material cost of job will include the replacement parts used. The work, the labor is treated as direct cost in this case, even if the mechanics are paid fixed amount each period. This is because it is possible to measure exactly how long each person works on the repair and their hourly rate of pay. So the indirect cost of repair job will include a share of overhead cost, like incurred in the garage, like rent of the garage, building insurance, depreciation of garage equipments. that cannot be traced directly with the cost unit. Let's check these interactive questions to identify direct cost or indirect cost. Indicate whether each of the following cost would be classified as direct cost or indirect cost of a particular car repair in a garage. The repair was worked on in overtime hours due to an usually large number of repair being booked into the garage that day. So you can give your answer. I'm asking the salary of a garage accountant. Is it direct cost or indirect cost? The salary of garage accountants.
Indirect.
Can you help me? Okay. Salary of garage accountant is direct cost or indirect cost? You said it is direct cost. Can you please explain?
স্যার এটা ইনডাইরেক্ট কস্ট হবে।
Yeah, it is indirect cost because you cannot trace garage accountant salary from a particular product, right? It's for
Yes,
all
sir.
products and it's a period cost. The cost of heating the garage. Yes, someone trying to say another explanation maybe. Can anyone trying to say anything?
No, sir.
Oh, okay. So we are going to next question. The cost of heating the garage.
Sir, it's indirect cost.
It's also an indirect cost. A can of engine oil used in the repair.
Sir, it's a direct cost.
It's direct cost. A smear of grease used in the repair.
Sir, it's also a direct cost.
Also a direct cost. Is anyone have different answer? Okay, let's explain. Yes,
স্যার এটা আদার ডাইরেক্ট কস্ট হবে না স্যার?
direct or indirect? Other direct cost also direct cost. It's also component of prime cost. But indirect cost is not a component of prime cost. So, as we said, if any cost is negligible or the material is used negligible amount, it cannot be, it may be treated as indirect cost, right? So a smear of grease, a negligible amount. Though we can identify it with the product or a specific garage repair service, but it's a negligible amount. That's why we can treat it as indirect cost. Then an overtime premium paid to the mechanic carrying out the repair.
Sir, it's direct cost, direct wages.
Because as we discussed earlier, the wages, whether it is overtime or regular, if we can identify it with the product, it will be treated as direct cost. An idle time payment made to the mechanic while waiting for delivery of parts for a number of jobs. Idle time payment made to the mechanic while waiting for a delivery of parts for a number of jobs.
So maybe it's a direct cost.
No, it's not direct cost because here the mechanic waiting for a number of jobs, right? So you cannot trace the high salary from a particular product. Okay. That's why it is indirect cost. The wages of supervisor overseeing the mechanic carrying out the repair. The wages
Right.
of supervisors overseeing the mechanic carrying out the repair.
So it's indirect cost.
Also indirect cost, as we know, supervisor is supervise all the task as he assigned for, right? Not a particular product. That's why salary of supervisors or payment to a supervisor or mechanic carrying out the repair will be treated as indirect cost. And we have to bear in mind some further points regarding direct cost and indirect costs. There are few possible misconceptions about direct and indirect cost that should be clarified at this stage. Direct costs are not necessarily bigger in size than indirect cost. As we have a conception, the direct cost should be higher or bigger than indirect cost. This is a misconception. Size does not or figure does not matter. Whatever the nature, we will treat the expense or cost as direct or indirect based on its nature. And indirect costs are not less important than direct cost. Sometimes we may also have a misconception regarding the overhead or indirect cost may be not required. Company product can be sold without overhead or indirect cost, or indirect cost is negligible to us. But direct cost, indirect cost, both are important for smooth operation of the company. For production, direct cost required, for maintenance and other support, overhead also necessary. So every cost is important and every cost should be recovered from selling the products. And it is easy to confuse fixed and variable cost and indirect cost and direct cost. Sometimes we became confused about direct cost and indirect cost, fixed cost and variable cost. But keep in mind, direct cost and indirect cost, it is segregated due to calculate product cost. Fixed variable is another segregation of costing. So direct cost can be fixed cost, direct cost can be variable cost. Indirect cost can be fixed, indirect cost can be variable. So we have to bear in mind about the nature of segregation. In what type we segregate cost? Do we segregating fixed variable and semi-variable, or do we segregating cost as direct, indirect? Okay, so we can be very much confused with direct cost and indirect cost. So we have to be very careful while answering question about these topics.
Sir, I have a question, sir.
Please.
স্যার আমরা একটা মিসকনসেপশন পড়লাম যে ডিরেক্ট কোস্ট আর নট নেসেসারিলি বিগার ইন সাইজ দেন ইনডিরেক্ট কোস্ট, মানে ডিরেক্ট
Right.
কোস্টের যদি স্যার যদি এটা স্মল সাইজে হয়ে থাকে তাহলে সেটাকেও আমরা হচ্ছে
ডিরেক্ট কস্ট হিসেবে ট্রিট করব।
ইনডিরেক্ট কোস্ট হিসেবে এটা ট্রিট করব।
No, no. Direct cost, whatever it is size, we will treat it as a direct cost based on its nature. When we can identify the cost with the product or production unit or cost unit, it will be treated as direct cost. And the cost which we cannot be traced with the product or cost unit, it will be treated as indirect cost. So size of the expenditure does not matter. This is I am trying to saying here, this misconception. Sometimes direct cost would be, let's say, 100 taka, indirect cost would be 1 lakh taka. So direct cost will be recorded. It will 100 taka will be recorded as direct cost, though the figure is small. But 1 lakh will not treated as direct cost as it is overhead or indirect cost. Okay, so that is I am trying to say the direct costs are not necessarily bigger in size than indirect cost. It can be bigger than indirect cost. It can be smaller than indirect cost. That is not matter. Matter is its nature. Can we trace it with the product or unit cost? If yes, then it is direct cost. If no, it is indirect cost. Okay.
Yes, sir.
We will see the maths regarding direct cost, indirect cost on the next chapter. So now we are going to valuing inventory and financial accounts. As you know, the inventory for financial accounting purpose, inventories are valued as cost or net realizable value, whichever is lower. So first of all, we have to know what is inventory. So we know about inventory. What is inventory?
So inventory as the raw material used in production বা ইনভেন্টরি হচ্ছে এমন সব জিনিস যেগুলোকে আমরা ফার্দার হচ্ছে প্রকিউরমেন্টের মাধ্যমে ফিনিশ গুডে পরিণত করি, এন্ড ফিনিশ গুড ক্যান বি অলসো ইনভেন্টরি.
So inventory, in an easy way, we can express inventory as the product remained unsold at the end of the year or end of the financial period, right? Like whatever the product, it can be raw material, it can be work in progress, it can be finished goods. Whatever we have in hand at the end of the financial year of the company, it is called inventory, right? So not only finished goods, not only raw material, not only work in progress, all about all the product in the hand of company at the end of its financial year is called inventory. And inventory will be valued at lower of cost or net realizable value. So the two terms came here. One is cost and one is net realizable value. So cost, number one, cost, we can say or we can understand what is cost. Cost is what we need to acquire the product. Then what is net realizable value? What is net realizable value?
কোনো মেটেরিয়ালসকে আমরা একটা স্পেসিফিক টাইমে বা যে কোনো একটা নির্দিষ্ট সময়ে যদি বিক্রি করি, তাহলে সেটা থেকে যে প্রাইসটা আমরা পাইতে পারি সেটা হচ্ছে নেট রিয়েলাইজেবল ভ্যালু.
Exactly. So the cost is what we pay at the time of acquiring the product or service. But net realizable value is we procured a product for resale or reproduction, but at the end of the financial year of the company, it remains unsold. So the value of this unsold product may be higher than its cost or may be lower than its cost, right? Sometimes product market can be fall. So the cost of or net realizable value of the product can be down than its acquiring or than its cost. Or sometimes due to its huge demand or market crisis, product price may be raised. As a result, the net realizable value can be higher than the cost. So whatever the value, we will value our inventory at a cost which is at cost or net realizable value, whichever is lower. Okay. So cost or net realizable value, whichever is lower, we'll treat it as inventory value. Okay.
Yes, sir.
So what will happen? Say cost of a product is 100 and net realizable value of this product is 125. Then at the end of the financial year, what will be our inventory value?
100.
100. And if it is, if cost is 100 and net realizable value is 85, then what will be our inventory value?
85.
85. Very good. Do you have any other question from any others regarding this valuation of inventory? Cost or net realizable value? Do any other have any confusion? I think no confusions. So let's go, let's move. So in practice, inventories will probably be valued at cost in the storage record throughout the course of an accounting period. Only when the period ends will the value of inventory in hand be reconsidered, so that items with net realizable value below their original cost will be revalued downward and the inventory records altered accordingly. However, in practice, we see rare net realizable value of a downgrade net realizable value. But whenever you are in pre-article student, as you are pre-article student after articleship, definitely you will go for inventory valuation of some companies, and then you have the chance to execute your learnings about valuation of inventory when you physically see the inventories or books of inventories or value with the cost and net realizable value. So charging units of inventory to cost of production or cost of sales. It is important to be able to distinguish between the way in which the physical items of inventory are actually issued and the way in which inventory is costed. In practice, a storekeeper may issue goods in the following way. So from store, as we know, that product that is produced by a company are preserved in a store, and there, of course, some storekeeper will manage or receive the products or inventory, and he has to follow some guidelines or criteria regarding issuing products from the store. So he may follow the following guidelines or rules. He may issue product that older goods first from the store, or he may issue latest goods received first, or he can issue randomly, or those that are easiest to him to reach. So by comparison, the cost of goods issued must be determined on consistently applied basis and must ignore the likelihood that the material issued will be costed at a price different from the amount paid for them. Here is an example. Suppose that there are 3 units of particular material in inventory, A, B, C. Date of receipt, June 2021, July 2021, August 2021. And purchase cost is 100, 106 and 109. In September, 1 unit is issued to production. As it happened, The physical unit actually issued was B. So here 1 unit issued in September, physical issue was product B. The accounting department must put a value cost of the material issued, but the value would not be the cost of B 106. So generally, we can say that as a store issued product B, its cost would be 106. But the principle used to value the material issued are not concerned with the actual unit issued. Whatever the unit issued, the cost would be as per principle of valuation of inventory. Nevertheless, the accountant may choose to make one of the following assumptions. So in that case, if we use first in first out method, then the value of product issued from from warehouse would be what? If we
100.
use first in first out, then value of product would be 100. And if we use last in first out method, then the value of inventory issued would be
109.
109. And if we use cumulative weighted average method, then the value of issued inventory would be weighted average means the product we received up to the date of issue, its average. So the product we received before issue, that is, we issued product at September and we received June, July, and August. So 3 months we received and issued in September. So average cost of January, February, and March would be the weighted average price of issue. So our weighted average price for price of issue for this product would be $100, $106, and $109. Sum of these three would be 315, right? So weighted average cost would be
105, sir.
105. Okay. So first in first out means whatever the product we received first will be issued first. In that case, that is 100. And last in first out means the product we receive last will be issued first. So the product we receive last is product C and cost is 109. And finally, the weighted average method is up to issue date, whatever product we receive, its average cost is weighted average cost. So up to September, we received 3 products costing 315 and its average price is 105. So the weighted average price issue is 105 each. We will discuss this valuation of inventory in details here with four methods: FIFO, LIFO, weighted average, and periodic weighted average method. Let's see the example. Pricing method in inventory valuation. In the following section, we will consider each of the pricing method detailed above using the following transaction to illustrate the principles in each case. Transaction during May 2016, 2026. First column is for particulars and dates, quantity, unit cost, total cost, and last one is market value per unit on the date of transaction. So ignore market price. Opening balance on 1 May, 100 units. Unit cost per unit cost is taka 2. So 100 unit total cost 200. Received in May 3, 400 at the rate of 2.10. It's 840. May 4, we issued 200. May 9, we received 300 at the rate of 2.12. May 11, we issued 400. May 18, we received 100 at the rate of 2.240. May 20, we issue 100, and 31st May, we had a closing inventory of 200 units. So we have to calculate the value of closing inventory, cost of material issued, and cost of purchased. So we will calculate 3 requirements from this example or from this illustration. Here, first of all, we will calculate value of inventory, cost of purchase, and cost of material issued under first in, first out method. That is FIFO method. Am I going fast, or I shall have to slow, or is it okay?
Okay, sir. Is it okay? No problem.
Okay.
So you can cooperate with me for solution for this question. Open. We are keep in mind we are solving this problem under first in, first out. That is FIFO method. So opening balance 1 May 100 at the rate of taka 2. Total cost is 200. We received May 3 400 at the rate of 2.10. That is at the end of 3rd May, we have closing inventory. How much unit? At the
500
end of May,
units, sir.
500, 400 and 100, 500 units. So the cost per unit would be value of inventory at the rate of
Sir, 1040.
1040 is total value. We need per unit value also. So per unit inventory value would be
Sir, 2.08.
okay. So we are calculating under first in, first out, right?
Yes,
So
sir.
under first in, first out method, we cannot make summation of all product under a single bracket. We have opening balance 100 unit at the rate of 2. We have to keep it 100 unit at the rate of taka 2 per unit. And we also have to keep 400 unit at the rate of taka 2.10 separately. Under first in, first out method, under last in, first out method, the number of inventory we received, including opening inventory, we have to preserve separate value for each receipt, and we have to issue following first in first out method. The product we received earlier will issue early first, and then we will issue next product. So we have inventory in hand at May 3 is 100 unit at the rate of taka 2 and 400 unit at the rate of taka 2.10. Is it clear?
Yes, sir.
Okay. So when we issue here, see, we issued at 4 May 200 units. Issue price not mentioned, right? So when we issued 200 units, what will be the issue price? Cost of issue. What will be the cost of issue for 200 units? We are using here first in first out method. So 200 unit would be issued from
The opening balance.
opening balance. How much?
100 unit at 2 taka.
At the rate of taka 2. Then
Then, sir, 100 unit at taka 2.10.
excellent. This is the answer. And at the end of day 4, or that is, and at the end of May 4, we have closing inventory. How much? And what price?
300, sir.
300 unit at the rate of
2.10.
2.10. Excellent. Now, 9 May, we again received 300 unit at the rate of 2.12. Now, please say the closing status of closing inventory. In 9 May, status of closing inventory would be
300 at 2.10 and 300 at 2.12.
excellent. And in 11 May, we issued 400. So the cost of issuance would be
The 300 at 2.10 and 100 at 2.12.
excellent. And closing inventory status at 11 May
Sir, 100 at 2.12.
at the rate of 2.12. Very good. Then 18 May, we received 100 at the rate of 2.40. So at May 18, our inventory status would be
Sir, 100 at 2.12 and 100 at 2.40.
excellent. Then May 20, we issued 100 units at the rate of
Sir, 2.12.
2.12. And then our closing inventory status would be
Sir, 100 at 2.14, 2.40.
100 at the rate of 2.40, and we have how much inventory we have at the end of 20th May?
So it is supposed to be 200 but
200.
according to my calculation, it's 100. So I've made some mistake somewhere.
Definitely. So look here, came to the 18th May. In 18th May, we received 100 at the rate of 2.40. 2.40. So our inventory status would be 200 at the rate of 2.12 and 100 at the rate of 2.40, right?
Yes, sir.
Right. Then we in 20th May we issued 100. So 100 would be issued at the rate of 2.12. Then our inventory status would be 100 at the rate of 2.12 and 100 at the rate of 2.40. This is our closing inventory, right? 200.
Yes, sir.
So our closing inventory value would be, total value would be 100 at the rate of 2.12, that is 212, and 100 at the rate of 2.40, that is 240. So our closing inventory value would be 452, right?
Yes,
Yes,
sir.
sir.
Let's check our solutions, what we made here under using FIFO. As we know, we have 100 in, we have 100 opening inventory at the rate of Taka 2. And we issued 4 May 200 units. We also received 3rd May 400 at the rate of 2.10. So as we are using FIFO method, first of all, we issued opening inventory 100. Then as we need to issue 200, it is not okay. So we issued this 100 and another 100 issued from 3rd May, 100 at the rate of 2.10. So we first 4 May we issued 410. Then we received in 9 May 300 at the rate of 2.12. So we have in inventory hand 300 at the rate of 2.12 and 300 at the rate of 2.10. That is first. Then we issued in 11 May we issued 400. So 400 we will issue first of all, we have 300 at the rate of 2.10. So 300 will be clear first at the rate of 2.10, and then another 100 will be issued at the rate of 2.12. And in 11 May we again received 400. Sorry, we in 18 May we again received 100 at the rate of 2.40. So we have 200 at the rate of 2.12 and another 100 is 2.40, total 300. Then we issued 20th May 100 units. So 100 will be issued from 9th May's product, that is we have 200. We will issue 100 from this. So 100 at the rate of 2.12. Then our closing inventory will be 100 at the rate of 2.12 and 100 at the rate of 2.40. So in 11 May, we issued 400, 300 at the rate of 2.10 and 100 at the rate of 2.12. That is 842. And in 20th May, we issued 100 at the rate of 2.12. So our total cost of issue would be 1464, and our value of inventory at the end of the month would be 452, and our total cost including value of inventory would be 1916. Is it clear under FIFO method, valuation of inventory?
Yes, sir.
Yes, sir.
Okay, great. So now come to the another method under LIFO method, last in first out method. That is just reverse. At the date of issue, whatever we receive last, we will issue first, and then we will go to back. So we will use same example for solving this issue also. It will help and reduce our time also. Again, opening inventory 100 at the rate of 2, received 3rd May 400 at the rate of 2.10. In May 4, we issued 200. So what will be the issue price under last in first out method?
200 per unit.
Excellent. And our inventory status at 4 May after issuance?
The 200 at 2.10 and 100 at 2.00.
Excellent. Then 9 May we received 300 at the rate of 2.12. So we have 300 at the rate of 2.12, 200 at the rate of 2.10 and 100 at the rate of 2. So we have 3 type of cost inventory. Then in 11 May we issued 400. So the cost of issue would be
The 300 at 2.12 and 100 at 2.10.
excellent. And our inventory status after 11 May?
100 at 2.10 and 100 at 2.00.
Great. Again, in 18 May, we received 100 at the rate of 2.40. And 20th May, so we have 300 in inventory, 100 2.40, 100 2.10, 100 at the rate of 2. 20th May, we issued 100 at the rate of what? In 20th May?
100 at 2.40.
Excellent. So the closing inventory at the rate of 31st May, 200 would be at the rate of?
So 100 at 2.12 and 100 at 2.00.
So our value of inventory would be under LIFO method?
412 total.
410. Excellent. So let's check. $410. Very good. And our issue cost is here under 4th May, 200 at the rate of 2.10, 11 May 400. So 300 at the rate of 2.12 and 100 at the rate of 2.10. In 20th May, 100 at the rate of 2.40. Total cost of issue is 1506 and our total cost including inventory is 1916. See here, in both cases, FIFO and LIFO, total cost of issue is 1916, but value of inventory is different. Under FIFO, 452 and under LIFO, 410. What is the reason behind this? Under FIFO method, few points you have to note that the cost of material issued plus the value of closing inventory equals the cost of purchase plus opening inventory. If we calculate cost of issue plus closing inventory and cost of purchase plus opening inventory would be same. The market price of purchase material is rising dramatically. In a period of inflation, there is a tendency with FIFO for material to be issued at a cost lower than the current market value. Although closing inventories tend to be valued at cost approximating to current market value. Under FIFO method, we try to issue product earlier first. So as we know, the product we purchased earlier under inflationary period, where high inflation is ongoing or inflation is ongoing, the product we purchase first, cost price of this product would be lower and the product we purchased last would be higher. So under FIFO method, the value of closing inventory would be higher and under LIFO method, value of closing inventory is lower because of inflation, nothing else. Under FIFO method, we issued earlier product first. Under LIFO method, we issued recent product. So the cost of recent product is high and cost of older product is low. So under FIFO method, as we issued oldest product we have in hand, recent product. So it has higher value of inventory. And under LIFO method, we have older products in hand. That's why we have lower value of inventory. Some advantage and disadvantage under FIFO method are, FIFO method is very logical. It is human nature. Whatever we have old, we will sell it first. And whatever we have new, we will sell it later. Because if we place two products, old and new, people will attract with new product. So old product would not be sold if we show both. That's why FIFO method is used. And it is very much logical. And it is easy to understand. The inventory valuation can be near to valuation based on replacement cost. But disadvantage is FIFO can be cumbersome to operate because of need to identify each batch of material. The fact is we have to maintain separate inventory with value under separate batch. That is cumbersome job. And manager may find it difficult to compare cost because under high inflationary period, the cost of recent product is high, but we are issuing the product which have lower cost. And in a period of high inflation, inventory issue price will be behind current market value. Inventory price will be behind current market value. As a result, we will face always lower value of inventory because we know inventory have to be valued at lower or cost or net realizable value, whichever is lower. Under FIFO method, net realizable and under a high inflationary period, value of inventory, cost of the product which receive first always be lower. That something may be exception. And the points to be noted under LIFO method, same ways. The cost of material issued plus the value of closing inventory equal to the cost of purchase and opening inventory. And in a period of inflation, there is a tendency with LIFO or following to occur. যখন inflation চলে, in an inflationary period, the materials are issued at a price that approximates to current market price. As we know, the under FIFO method, recent product are issued. So the value of product issued is approximate to current market price, and the closing value of inventory is always undervalued as the earliest or old products are remains in hand. It's we procured with a lower value. That's why our value of inventory will be lower. Now come to another methods of inventory valuation, that is weighted average pricing method. It's very much simple and easier. We will calculate one value of inventory by summing all the receipt up to issue date. So here in 1 May we have 100 at the rate of 2, that is 200, and in 3 May we received 400 at the rate of 2.10, that is 8.40. So up to May 3, we have 500 inventory units of inventory with a total cost of 1040 taka. So weighted average price of cost would be, cost per unit would be 1040 divided by 500. How much?
2.08.
2.08.
So in May 4, we will issue 200 at the rate of
2.80.
2.08.
2.08. Okay. And our inventory in hand at the at May 4 is 300 at the rate of
2.08.
2.08. Excellent. In received in May 9, 300 at the rate of 2.12. That is 636. So value of inventory at 9 May. First of all, we have 300 at the rate of 2.08. 624, right? And we now received 300 at the rate of 2.12. That is 636. So total value of inventory units, total 300 plus 300, 600, and value of inventory 624 plus 636 equal to 1260, right?
Yes,
1260.
sir. Yes, sir.
So value per unit,
So 2.10.
2.10. May 11, we issued 400 at the rate of 2.10.
2.1.
And closing value of inventory at the at the end of May 11, 100 at the rate of 2.10.
The 2.20.
How? At the end of May 11, I am not talking about 18 May. After issuing 400 units, we have in hand 100 unit or 200 unit.
The 200 unit at 2.10.
200 unit
The
at the
200
rate of,
unit.
right, 200 unit at the rate of 2.10. That is 420 taka total. Then in 18 May, we received 100 unit at the rate of 2.40. That is 240. So after 18 May, our total quantity of inventory is 300 and total value of inventory is 450, right? No. 220, 420, 200 into 2.10 equals to 420, right?
Yes, sir.
And in 18 May, we received 100 at the rate of 2.40, that is 240. So 420 plus 240 equal to 660, right? So per
Yes,
unit
sir.
would be 2.20.
Yes, sir.
Okay, great. Then in 20th May, we issued 100 at the rate of 2.2.
2.20.
Then our value of inventory 200 unit would be 440, right? $440. Is it okay?
Yes, sir.
Okay. So under weighted average pricing method, our value of inventory is 440. Now, last method of we will discuss last method of inventory valuation is periodic weighted average method. So under periodic weighted average method, we will value inventory, all inventory value, whatever we purchased here. Okay, we close first this issue, then it will be easy to discuss. So point to be note, let's check our inventory, closing inventory 200 at the rate of 2.20 is 440 and our issued product is 1476, and our value of total inventory, including closing inventory, is 1916. So the point to be noted here, one new line added with the star, giving a star. A new inventory value per unit is calculated whenever a new receipt of material occurs. Under cumulative weighted average method, a new inventory value is calculated whenever we received a new product. What we done? Point to note, the cost of material incurred issued plus the value of closing inventory equals the cost of purchase plus value of opening inventory as usual. And in a period of inflation, using the cumulative weighted average method pricing system, the value of material issue will be rise gradually, but will tend to lag a little behind the current market value at the date of issue. Closing inventory value will also be little below current market value, because as we calculate all product in inventory line, whatever we received earlier or recent, we use average price. That's why the market price of inventory is higher than our cost price. Here, a interactive question for you: inventory valuation methods. We have to calculate the given A, B, C, and D. So let's try. Shown below is extract from records for inventory item number 988988. Here, 5 June, we have value of inventory. We have 330 quantity at the rate of 2.50, total 75. 8 June, we received 20 unit at the rate of Taka 3, that is 60. 10 June, we issued 10. 14 June, we issued 20. 18 June, we received 40 at the rate of 2.40, is 96. June 20, 6 quantity issued. Value we have to calculate, and value of inventory, closing inventory, we have to calculate. So the value that would be entered on the store's record A, B, C, D, and D in a cumulative weighted average pricing system. So now calculate under cumulative weighted average pricing system A, B, C, D. So what will be the value of A? That is issued 10 units at total value and 20 units total value. It's very much easy. First of all, we have 30 units, total cost 75. Then at June, we receive 20 units at the rate of Taka 3, that is 60. So we have in hand 50 units at 8 June. Total cost is 135. So per unit cost would be under weighted average price method 135 divided by 50.
So 2.7.
2.7. So the value of A would be
So 27.
total cost. It should be total cost.
So 27.
27. Then in value of B, $20 units.
So 54.
54. Then in 18 June, we received 40 units at the rate of 2.40, that is 96. So we don't have inventory in hand, right? After 14 June? Or we have inventory?
So we have an inventory of 20 units.
20 unit at the rate of 2.7, right?
Yes, sir.
Okay. Then we receive 40 unit at the rate of 2.40, that is 96. So 20 unit 2.7 equal to 54, and 40 units 96. That is 150, total 60 unit, right? So per unit would be
2.5.
2.5. So value of C would be 6 into
15.
15, and value of D, value of closing inventory, number of unit would be closing inventory unit. We have 60 units in hand and we issued 6 units. So our closing inventory unit would be 54, and value of closing inventory 54 into 2.5.
135.
135. Let's check. Is it okay? 2754 we have calculated earlier, then 15, and finally 135. So our calculation is okay, right? A, B, C, D.
Yes, sir.
So let's move option 2. The value that would be entered on the store record A, B, C, D under LIFO method. So if we use LIFO method, value of A would be
Okay.
30. As latest received is 8 June, 20 units at the rate of 3. So we will issue 10 unit at the rate of 3. The 10 into 3 equal to 30. Then under 14 June, 20 units issued. So value of B would be
55.
55. Composition, please.
So
Please tell me the
10
composition.
at 3.0 and 10 at 2.50.
Excellent. So 55. Then in 18 June, we received 40 at the rate of 2.40. And 20 June, we issued 6 units. What will be the value of C?
So
6 unit,
14.4.
right? 6 unit at the rate of 2.40. Then we have closing inventory. So the value of closing inventory would be
So 36 at 2.40 and 20 at 2.50.
total
136.40.
136 or 31. $31, right? 36 into 2.4. It's 81.4. And 20 into 2.5. It's 50. So equal to 131.4. Sorry, 131.6. So let's check our issues. So 10 unit at the rate of 3, 30, 20 units at the rate of 3, 60. No, 20 units, 10 at the rate of 3 and 10 at the rate of 2.5 equal to 55. And finally, 6 units at the rate of 2.4 equal to 14.4. And the value of inventory would be 20 units at the rate of 2.5, that is 50, and 34 units at the rate of 2.4 equal to 81.6. It's total 131.6. 6. Is it okay? Clear?
Sir.
You may face this type of question in your exam. So let's concentrate. And if you have any queries or any problem, please don't feel hesitate to ask me. Make it clear. I will be happy if you ask me now. Rather, you will face difficulty while resolving this problem in your examination hall. So get clear now so that you can answer your questions in the examination hall easily. Okay. So don't be hesitate to answer me or ask me question. If you feel shy, you can ask me in Bangla. No problem. Okay. Is it clear, man?
Yes, sir.
Yes, sir.
Yes, sir.
Okay, so no confusion. Let's move to the next slide. It's about periodic weighted average pricing. It's the easiest way of calculating value of inventory using periodic weighted average pricing. The issue cost and closing inventory of transaction in 2.4 that is we are resolving is, see here, the formula is cost of opening inventory plus purchase during the period. So the number of purchase we made during this period, total cost of purchase plus opening inventory divided by units or quantity of opening inventory plus quantity of purchase during the period. So we can go here again in the question. The number of unit purchased, now opening inventory quantity is
100.
100 and value is 200, right?
Yes, sir.
Right. And unit purchased during this period is total unit purchased
800.
800 and total cost of purchase 840, 636 and 240. It's 1716. So we have opening inventory taka 200 and we purchased during the year 1716. This is our amount divided by we have opening inventory 100 and we procured 800 during the period. So if we divide this cost, total cost, including opening inventory by total quantity,
2.1.
opening inventory, we will get periodic weighted average price. So 200 plus 1716 divided by 100 plus it. So it's 2.129 per unit. Our periodic weighted average price is 2.129. And whenever we issue product this month, until further receive, our issue price is 2.129. So our issue quantity is total 700. So our total issue cost would be 700 into 2.129 equal to 1419. And closing inventory is 200 units. So the value of closing inventory would be 200 into 2.1129, 426. Our total cost is 1916. Is it clear? Periodic weighted average method?
Yes, sir.
Yes, sir.
Is not it much easier than other methods?
Yes, sir.
keep
Quite
in
easy.
mind, quite easy. So keep in mind, we may face this type of questions in the examination hall. You may, as it is very much easy, we ignore it. That type of question may not come in the exam. But you never predict CA exam what will come. A silly question may come and you may give wrong answer. So each and every question you have to read attentively and you have to resolve attentively to become successful in the examination. So whatever the type of question, it's easy, silly, whatever it is type, you have to resolve it. Okay. So notice that once again, the cost of material issued plus the value of closing inventory equals to the cost of purchase value, that is 1960. Here inventory value and profitability. See, we already calculated this under FIFO method. Closing value of inventory 452 and cost of issue 1464. Under LIFO 410, 1506 is our cost of issue. Under cumulative weighted average 440 is our closing inventory and 1476 is our cost of issue. And finally, periodic weighted average method 426 is our closing inventory value and 1490 is our cost of issue. So can you please answer me, under which method we will get higher profit? Which inventory valuation will give me higher profit?
The FIFO method.
Under FIFO method. How?
So the cost of issue is the lowest here.
Cost of issue is lowest and value of closing inventory is higher. Where we get higher value of closing inventory, we will get higher profit. That is, higher value of closing inventory gives us higher profit. Is because closing inventory move with some cost to the next period. That's why we get higher profit in the current period as closing inventory moves with some cost. So it is easy to remember that higher value of inventory will give higher profit, closing inventory of course, and lower value of closing inventory will give lower cost, lower profit. So since material cost affect the cost of production and the cost of production works through eventually into the cost of sales, which is also affect the value of closing inventory, it follows that different method of inventory valuation will provide different profit figure. So do you feel we need a break?
Yes, sir.
We shall continue.
Yes, sir.
Okay, so let's take a break for how much? 10 minutes?
Okay, sir.
Okay, so we will come back at 8:50, okay?
Okay, sir.
Thank you. Thank you. Okay, welcome back. We just practiced inventory valuation method and value of closing inventory, cost of issue, and profitability under first in, first out method, last in, first out method, cumulative weighted average method, and periodic weighted average. Now we will calculate the inventory valuation and profitability of the organization. Am I audible to all?
Yes, sir.
Yes, sir.
Okay. So let's move forward with the worked example. On 1 November 2022, DD Limited held 3 pink satin dresses with orange sashes designed by Frida Socks. These were valued at 120 each. So on 1st November, DD Limited had 3 pink satin dresses with orange sashes at the rate of 120. During November 2022, 12 more of the dresses were delivered as follows. 10 November, 4 dresses received at the rate of 125. 20th November, 4 dresses received at the rate of 140. And 25 November, 4 received at the rate of 150. A number of the pink satin dresses with orange sachet were sold during November 2022 are as follows. 14 November, we sold 5 dresses at the rate of 200. In 21st November, we sold 5 dresses at the rate of 200, and 28 November, we sold 1 at the rate of 200. So selling price, all are same at the rate of Taka 200, but purchase price is different. Our requirements is calculate the gross profit from selling the pink satin dresses with orange sashes in November 2022, applying the following principles of inventory valuation under FIFO method, LIFO method, and cumulative weighted average pricing method. So we have to calculate the profitability. As we know, for calculating profitability, we have to calculate cost of goods sold, then sales price minus cost of goods sold equal to profit. So to calculate cost of goods sold, we have to calculate formula of cost of goods sold is opening value plus purchase during the period minus closing value of inventory equals to cost of goods sold. So let's check cost of goods sold first. As we sold 551, that is 11 dresses at the rate of 200. As we know, we can easily calculate our value of sales. Our sales value is 2,200. Now calculate cost of goods sold of this 11 dresses under FIFO method. So we have inventory 3 of pink satin dress at the rate of 120. And we received 10 November 4 dresses at the rate of 124. So 14 November we sold 5 dresses. So 14 November we sold 5 dresses at the rate of under FIFO method at the rate of what? 14 November we sold 5 dresses at the rate of okay. Now, first we have to check the status of inventory at the after 10 November or at 10 November. So, inventory status of 10 November is 3 pink satin days at the rate of 120 and 4 at the rate of 125. So, when in 14 November we issued 5 dresses at the rate of under FIFO method, we will issue the product which comes earlier to our warehouse as we using FIFO method. Can you understand? Or am I audible? Am I audible to all?
Yes, sir.
Okay. Can you understand? Hello? Let's make a roll call. Muhammad Nahid, 1291. Muhammad Nahid, 1291. Available? Annation Shaha, 1107. Saidul Alam.
Assalamu alaikum, sir.
Wa alaikum assalam. 1210. Registration number 1210. Roll number 1210. Available? Shihab Ahmed. 1305. 1377. Hafizur Rahman. Arafat Hussain, 1313.
Yes, sir. Available.
Ashfaq Ishtiaq, 1374. Ashfaq Ishtiaq. Aisha Akhtar.
জি স্যার।
Didarul.
জি স্যার।
Harunur Rashid. Imrul Hassan.
Yes, sir.
Okay. Imrul Hassan কি আছেন?
Yes, sir.
Okay. ইসরাত জাহান. খায়রুল আলম.
Yes, sir.
আরিফুর রহমান.
Yes, sir.
গোলাম রহমান. গোলাম
Yes,
রহমানি. সাবরিনা সুলতানা.
Yes, sir.
Okay. So অনেকেই আছেন. আমার am I audible to all?
Yes, sir.
Yes, sir.
Is the math is easy going or not understandable to you all?
It's easy going, sir.
Easy going. Okay, let's cooperate with me. So here we are selling 5 dresses at 14 November. So we have inventory up to 14 November, 3 dresses at the rate of 120 and at the rate of 4 dresses at the rate of 125. So under FIFO method, when we issue 5 So first of all, from which quantity we will issue?
From the
Sir,
first
from
one,
3
sir.
at 120.
3 at the rate of 120 and rest 2 at the rate of 125, right?
Yes, sir.
So our cost for first 5 is 120 into 3, that is 360, and 125 into 2, it's 250. So total 610, right?
Yes, sir.
610 for 5. Okay. Then in 20 November, we received 4 unit at the rate of 40. So up to 20th November, we have 2 unit at the rate of 125 and 4 unit at the rate of 140. And in 21, we issued 5 unit. So 5 unit issued from 2 unit at the rate of 125 and 3 units at the rate of 140. So again, 125 into 2, 250, and 140 into 3, that is 420. 420 plus 250, 670, 670. And in 25, we again receive 4 unit at the rate of 150. And 28 November, we issued 1. So this one cost would be 140 or 150.
140.
Last one, 140. So total cost 140, 670, and 610. So
Yes,
total
sir.
cost is 1420. So let's see. 1420. Our selling price is 11 unit selling price is at the rate of 200. 2200, right? So our profit is 2200 minus 1420 equals to 718. 80. $1,420 is our total cost. Selling price is 2200. So profit equals to
So 780.
720. So now let's check with LIFO, last in first out method. Please calculate the cost and profit. Total cost amount is
So 1535.
1635 or 1450. Let's check. 14 November, we issued 5 units. So 14 November, we issued 5 units from last in first out method as it is. So 4 unit at the rate of 125.
I think, sir,
500.
I've made some mistakes. Sorry, sir.
Okay, no issue. Let's check. So 4 unit at the rate of 125 equal to 500 and 1 unit at the rate of 120. That is 620 for first 5 units. Now in 25 November, 5 units. So first of all, we issue 4 units at the rate of 140. It's 460. And 1 unit, another 1 unit from 120. So it's 680. So 620 plus 680, it's 1300. And finally, 1 unit issued. So final 1 unit will be issued at the rate of 150. So 1300 plus 150 equal to 1450. Our selling price is as usual 11 into 200. It's 2200. So 2200 minus 1450. Its profit would be 750, right?
Yes, sir.
Okay. And finally, the third option is cumulative weighted average price method. So in 10 November, we have total 3 and 4, 7 product. 125 into 4 equal to 500 and 120 into 3, 360. So 860 divided by 7. So per unit would be 860 divided by 7. Per unit product cost would be
122.8.
122. So
186.
122.86. So we issue 5 units at the rate of 122.86 equal to 614. Then again, so in our hand, we have 2 units at the rate of 122.86. Then in again, we receive 4 units at the rate of 140. That is 560. So first 2 units or 246 and new 4 units, total 6 units. Total cost is 806. So per unit cost would be 134.33. Then we again issued 5 units at the rate of 134.33 equals to 672. And in 25th November, we received 4 units at the rate of 150 equal to 600. So total 5 units at the rate of 734 is our total cost and average cost is 146.8. And 1 unit would be issued 146.80. That is 146.80. And finally, 4 units is closing inventory 146.80 equal to 587. So now check our profitability. We have opening inventory in all cases 360 as it is 3 units at the rate of 120. We purchase during the period for all level 1616. Value of closing inventory we calculated here 587, 570 and 600. FIFO 600, LIFO 570 and weighted average 587. So our cost of sales is 1420 we calculated earlier, 1450 under LIFO method and 1433 under weighted average method. And our sales value is 2200. So profit is under FIFO 780, under LIFO 750 and under weighted average 767. As I said earlier, the higher value of closing inventory shows higher amount of profit. Let's check. Under FIFO method, value of inventory is 600 and our profit is 780 highest. And second highest is weighted average method, where value of inventory is 587 and our profit is 767. And lowest value of inventory under LIFO method is 570 and our profit is 750. Okay. That was all about our this chapter, cost segregation and valuation of inventory. Any question about this chapter? If you have any query, please ask, or we'll move next chapter. Do you have any query? Any questions? Okay, so we can move next chapter. Here, one thing you have to bear in mind, that in this chapter, the math is so easy. And if you concentrate, you can easily resolve this maths and you can answer easily. But if you think these are easy and I can easily go with it, and you don't put your concentration on this math, you definitely will make mistakes in your exam. That's why I'm asking you or requesting you, give full concentration when you resolve these problems. And as I said, put your full concentration, whether it is easy, whether it is a silly question, or whether it is a hard question. Give your full concentration and make your brain easier, so that whatever question comes in your examination, you can give right answer. For a silly mistake, you have to pay, and your answer may be become wrong. So give full concentration on all questions, whatever you answer. So thank you. Now I am going to the next chapter. Oh, we have some lag from first chapter. Then I will share both slides with you. Chapter 1, we almost completed. Maybe we discussed relevant range, then some problem occurred. Is someone was present in my last class from the presence? Okay, you may not remember. However, I can remember that I was stopped in this slide. Let's resolve this interactive question. It's interesting. Most of us do mistake in this question and give wrong answer. So let's resolve this. In general, as activity level rise in a relevant range. Relevant range means a level of activity up to which fixed cost is fixed. So whatever activity you done, your unit price may be up or down, but total cost for the company remains same. So in general, as activity level rise with the relevant range, the variable cost per unit will rise, fall, or stay same. In a relevant range, if activity level rise, our variable cost per unit will rise, fall, or stay same. Which option will be right? Variable cost per unit will rise or fall or stay same? As we know, variable cost per unit always fixed. It is not related with relevant range. Whatever unit we produce, variable cost per unit is fixed. So in relevant range, level of activity if raised, the variable cost per unit will stay the same. The fixed cost per unit will, so relevant range is related with fixed cost. If activity level rise, fixed cost per unit will down or fall. So here activity level is rising within the relevant range, so the fixed cost per unit will fall and the total cost per unit will, as variable cost remains same, fixed cost per unit falling, so total cost per unit definitely fall.
Yes, sir.
Okay. Do you asking something?
No, sir, I said yes, sir.
Okay. This type of question may come in your examination. Here, one technique is applied. See, the variable cost per unit included here in option 1, rise fall. Relevant range is not related with variable cost. Variable cost per unit always fixed. Whatever the unit price up, down, it's remain same. But fixed cost per unit will ups and downs. If real activity level rise, fixed cost per unit will fall. If activities level go down within relevant range, fixed cost per unit will up. So if fixed cost fall, total cost definitely fall. If fixed cost goes up, fixed cost total cost definitely goes up. Here another cost behavior graphs. Okay, this cannot be sent here. Responsibility accounting is a term, is a system of accounting that segregates revenue and cost into areas of personal responsibility. Responsibility accounting denotes for segregating responsibility to the managers or downgrade managers who are responsible for doing this job. Say for a unit head like head of procurement division or head of supply chain management division, head of HR division, they have some responsibility and they will be come under a monitoring process, so that they have to answer about their job. That's why they have to perform their responsibility to continue their job, and they should be asked by senior management about their responsibility. If they completed their or executed their responsibility properly, company will reward him. If he fails to execute his responsibility, he will be punished. That's why responsibility accounting is established, and it gives immense huge result to the company, so that each corners a manager have no chance to become negligible or reluctant. He have to perform his duty and he has to fulfill his KPI to get reward. Otherwise, he will be punished. That's why responsibility accounting helps company to ensure its profitability as well as maximize the responsibility of the down level manager. So a responsibility center is a department or function whose performance is direct responsibility of a specific manager. And details is I already narrated. Controllable and uncontrollable cost. A controllable cost is a cost that can be influenced by management decision. To a company, both type of cost exist: controllable cost, uncontrollable cost. The cost the management decision can influence is controllable cost. The cost which management, the internal management of a company can control is controllable cost. And the cost which not controlled by management decision, it is not uncontrollable cost. So the controllable cost are employee salary, rent of factory, then production cost, labor cost, all are depends on management decision, internal management decision. So whatever the rent, is factory, the factory size, whatever the factory size, the management may want a small factory. They can consume, they can produce their product in a small factory, so they will go for it. They can control their rent expense. They may expand their factory and they can extend their rent expense also. So employee also, it's management decision, quality employee, number of use, getting employee, ensure labor rights. It's up to management decision. So the cost that can be managed. So in short, we can say that the management of the company, management means the decision makers of the company can, those cost control, can be controlled by the management of the company, are controllable cost, and thus are not unable to control by management, or beyond the level of control of management, are non-controllable cost. Like, for example, we can say the bank interest. Management has no control on bank interest. Bank is external to the company and interest rate is full discretion of banks. So it is not a controllable cost or uncontrollable cost to the company. Another one is inflation. Inflation cannot be controlled by company as it is a national issue. So it is uncontrollable cost to company. Again, income tax, VAT is uncontrollable cost to the company, as government or National Board of Revenue decide the tax, income tax rate, value added tax rate. So it is uncontrollable cost to the company. So this was left in my last classes. Last class I have taken from you. So any question just discussed earlier about first chapter, you can ask. Do you have any question? I think you don't have any question. So as we are running short, your question, examination will be in 20th February and today is 25. So it is difficult to conclude the syllabus. That's why our asked to conclude as early as possible. That's why I'm going fast. And as I have concluded first and second chapter, now I will start chapter 3, so that in next class, chapter 3 is quite large, and some maths is also available. That's why I am just starting. Whatever 5 or 6 or 10 slides I can continue, and then I will conclude today's class. Don't be bored. Are you becoming bored or feeling bored with this class?
No, sir.
No,
Okay.
sir.
Okay, let's continue. As my co-teacher already completed maybe 2 or 3 chapters, I am just behind. So we have to go fast. Hopefully in next Saturday, I will also take my class. For some few reason, last week I have to drop class and Mr. Shakhawat taken your last class. So I am opening chapter 3. 3. Okay. It's a aligned class with aligned chapter with chapter 2. Okay, so we may face some easy movement in this chapter, and math will be easy to catch, hopefully. So management information chapter 3, calculating cost unit, part 2. In this chapter, we will discuss about absorption costing, activity-based costing, costing methods, and other approach to cost management. That is absorption costing, activity-based costing, costing methods we have, and other approaches to cost. Those are studying in BBA already. Hopefully you are aware or familiar with the cost accounting, management accounting. So I am discussing, you may align with your academic study also. In the examination, candidates may be required to calculate the full cost of cost unit using absorption costing, demonstrate understanding of basic principles of activity-based costing, identify the most appropriate costing method in specific circumstances, and demonstrate an understanding of the general principle of target costing, life cycle costing, and just-in-time. Life cycle costing is like if you studied marketing in your study or academic career, you may align with product life cycle. You may be familiar with product life cycle. This life cycle costing is similar to the product life cycle, as I will discuss definitely today or in my next class. And it is essential to appreciate the difference between the allocation and apportionment of overhead, which links back to the ideas. And a common difficulty is failing to allow for under over absorption when predetermined overhead rates are used. It will be cleared when I discuss the maths of this chapter. So first topic of this chapter is absorption costing. We have to know what is absorption costing. Absorption costing is nothing that is that is about a full cost plus a portion of overhead is taken under consideration to calculate product cost. Product's full cost, that is production cost, plus a portion of overhead is included under absorption costing to calculate product price. So in absorption costing, the full cost of cost unit is equal to its prime cost plus an absorbed share of overhead cost. There are 3 stages in determining the share of overhead to attribute it to a cost unit or allocation, apportionment, and absorption. So in absorption costing, there are 3 stages. First one is allocation of cost, second one is appropriation, and third one is absorption. And overhead are absorbed into product or service cost using predetermined overhead absorption rate. Definitely, overhead absorbed with a predetermined rate. As we prepare our budget based on previous data, that is under on estimation, what will be future, what will be happen in future, we estimate today through based on previous data or historical data. So absorption costing is based on actually assumption. Then at the end of the year, we match our assumption or estimation with the actual data. Then we find the variance. The absorption rate is calculated by dividing the budgeted overhead by the budgeted level of activity. For production overhead, the level of activity is often measured. Over or under absorption of overhead arise because the absorption rate is based on estimates. As I said earlier, at the end of the year, we will get some variance, what we estimated and what actually happened. And the difference incurred due to estimation. As at the starting of the year, we made some estimates about future, and after concluding the period, we match actual with the estimation and we get the variance. Based on variance, we try to find out why this variance occurred, what is our low fault or what is our fault while preparing or making estimation. Then we try to reduce this estimation, reduce this fault, and try to cope up upgrade the estimation with more scientific way. And next year we have to avoid this repetition. Then the budget will be more accurate, variance will be more variance will be to a negligible level. So we in the last chapter we seen that cost of product would be direct material, direct labor, other direct cost equal to total cost or full cost. But under absorption costing, one additional things added is a share of indirect cost. That is direct material, direct labor, other direct expense, if any, plus share of indirect cost or overhead equal to absorption or full cost. So there are three stages, as I said, in determining the share of absorption or attributed to cost: overhead allocation, overhead apportionment, and overhead absorption. So first stage is overhead allocation. So allocation is the process by which whole cost items are charged direct to the cost center. This is allocation. What we expended, for example, for labor, for overhead, for materials, what we expended, first of all, we will allocate this expenditure to the user division first, or cost center. A cost center acts as collecting place for cost before they are analyzed further. So cost center may one of the following types. It can be production department, it can be service department, it can be administrative, it can be selling or distribution. So all are cost center. An overhead cost center to which items of expense which are shared by a number of departments such as rent, rates, heat and light and canteen are charged. So overhead cost definitely rent, as we know, this types of overheads are rent, rates, salary, heating, lighting, that's type of cost, and these have to be allocated to over the divisions of the organization. And the following example of cost that would be charged direct to cost centers via the process of allocation. The cost of warehouse security guard will be charged to the warehouse cost center. Paper on which computer output is recorded will be charged to the computer department. That is, in simple or in short, we can say the charge or the expenditure which is related to the department there, or the expenditure will be charged to the division. Those are related with this expenditure. An example of overhead allocation is, consider the following cost of a company. Department A, 200. Wages of Department B, 150. Indirect material consumed by Department A, 50. Rent of the premises shared by A and B is 300. So look, some cost already I can or we can segregate. Say wages cost of Department A, B already segregated. So nothing to be allocated. It's already segregated and allocated. Indirect material already allocated. But one thing is not allocated, combinedly expended, is rent, A and B. So we have to allocate this rent to the division of user division through a logical ground. So here 300 is rent. We cannot segregate 150, 150. We have to we have to be logical to before segregation. Say A using 80% of the rent. So 80% cost have to be bear by A and B have to bear 20%. So we have to become logical while segregating or allocating cost among the division or between the divisions. Overhead cost would be allocated directly to each cost center. First of all, those are already allocated. The rent of the factory will be subsequently shared between the two production departments. But for the purpose of day-to-day cost recording, this particular system, the rent will first of all charge in full separate cost center. Second stage is overhead apportionment. This involves apportioning general overhead to cost center. First stage, and then reapportioning the cost of service cost center to production departments. That is, apportionment is, first of all, we segregate or we allocate all expenditure to the divisions, those are related to it. But At the end of the period, we can we see or we can realize all the department or division of an organization cannot earn profit. Some departments are already only for expenditure incurred and they cannot generate revenue, as all organs of your body is required to work properly for your healthy life. Like that, for smooth running and easy operation going and sustainable company, they need some profit generating or revenue generating department. They also need some department, those are not generating revenue, but they support to accelerate revenue. So all departments are equally important. So non-revenue generating departments of an organization are definitely sales division, production division. They're generating revenue for the company. But the divisions, those are supporting, are like human resource division, accounting division, accounts division, internal audit division. These divisions are support division. They provide support to other division. So all the divisions are equally important to the company. Here, apportionment is required for those company, those divisions expenditure to the revenue department, revenue earning division, as otherwise the division not earning revenue, their expenditure remain unrecovered. To recover all expenditure incurred in an organization, these divisions, not revenue generating divisions, cost transferred or apportioned to the department, those are generating revenue. This is called actually apportionment of cost centers, reapportionment of cost centers, reapportionment of cost of service cost center to production department. So as we said, in first stage, overhead apportionment follows for overhead allocation. The first stage of overhead apportionment is to directly for all overhead costs to production department and service department. And in second stage, we reapportioning service division's cost to the production division cost. Now we have to become logical for allocation of overheads over the divisions of the organization. So for becoming logical, we have to allocate cost under a logical basics. So we can use these logics while segregating the expense over the divisions of the organization. So like rent rates, overheads, like rent rates, heat and light, repair, depreciation of a building, we can segregate this expenditure using floor area occupied each cost center. Depreciation, issuance of equipment, cost or book value of equipment. Depreciation cost can be allocated through using cost or book value of equipment. And personal, office, canteen, welfare, wages and cost of office first aid can be segregated through using number of employees or labor hour used. Heating, light may be segregated using volume of space occupied by each cost center. So here an interactive question, you have to give answer. Some basis of apportionment of expenditure is given: volume of cost center, value of machinery in cost center, number of employees in cost center, floor area of cost center. So you have to complete A to D under the A to D for the following questions. So rent, we can allocate rent using basis of the segregation of or allocation of rent
Floor
expense,
area,
floor area of cost center. Then heating cost,
volume of cost center.
volume of cost center. Very good. Then insurance of machinery,
Sir, value of machinery in cost center.
Value of machinery in cost center. Excellent. Then cleaning cost.
Number of employees.
Cleaning cost can be segregated number
Floor
of
area,
employees
sir.
or floor area is most logical. Then canteen cost.
Sir, it would be number of employees in the cost center.
Center. Excellent. So this would be our last slide or last worked example for today's class. So make some chill. We'll conclude by today's class by resolving this maths. Here is a worked example. Overhead apportionment. Maksodur company has incurred the following overhead cost. Depreciation, factory repair and maintenance, factory office cost treated as production overhead, depreciation of equipment, insurance of equipment, heating, lighting, and canteen. The information relating to the production and service department in the factory is as follows. So floor area or floor space, production 1, 2, service division are coded by service 100 and service 101. So floor area of production 1 er 1200, 100, 1200, production er 1600, service 1 800 and service 2 400 square meter. Volume cubic meter, number of employees and book value of equipment is given here. The overhead costs are apportioned using the following general formula. Total overhead cost divided by total value of apportionment base into value of apportionment base for cost center. So here the heating and heating department total cost is 39,000 and total. So heating department 30 heating is allocated using heating cost can be allocated using in which basis?
The volume.
Volume or cubic meter. So total volume is 13,000, right? Total volume for all department 3,600, 6,000, 2,400 and 1,600. Total 13,000 and our heating cost is 39,000. So per unit cost is 39,000 divided by 13,000. That is per heating cost per cubic meter is taka 3 per unit. So production 1 heating cost would be 3,000 into 3, 9,000. So production 2 heating cost of production 2 would be how much?
12,000, sir.
Cost, sorry, how much?
12,000. 18,000, sir. 18,000.
Number of cubic meter of production 2 is 6,000.
6,000.
Per unit is taka 3. So
3.
product heating cost of production 2 is
18,000, sir.
18,000 and service 1 heating cost of service 100. Service 100
7,200.
7,200 and last one service 101 is heating cost is
4,800.
Oh, excellent, excellent. So we can segregate lighting cost also. Can we segregate lighting cost? Lighting cost how much? Total lighting
The
cost of
total
the
is
company.
10,000, sir.
10,000. So basis would be for segregation of lighting cost,
The floor space.
floor space. Floor space is much logical because light used based on floor space. So please segregate or allocate lighting cost to the all the division and give me the answer for production 1, 2, service 100 and service 101. First of all, we have to calculate total floor area of the company. So total floor area of the
4,000
company
square meter.
4,000 square meter. Then we have to calculate per square meter cost.
2.5.
Then we will 2.5, right?
Yes, sir.
So floor area of production 1 would be
So the cost allocated would be 3,000.
1,200 into 2.5 is 3,000. Then production 2,
4,000.
4,000. Service 100,
2,000, sir.
2,000. And service 101,
So 1,000.
1,000. Excellent. Then canteen cost is 90,000. So canteen cost will be allocated on the basis of
The number of employees.
number of employees. So production department canteen cost would be same consequence, same calculation.
Uh, 30,000, sir.
2,
So 30,000, and for service 100 it would be 15,000, and department service 101 would be 15,000.
excellent. So major 3 already we segregated. Now come to first point, depreciation of factory. It would be allocated based on depreciation of factory will be allocated basis on the basis of
Floor area, sir.
no.
Book value.
It should be book value of equipment. Is it?
Yes, sir.
Yes, sir.
No, you are right. It should be floor space, factory. Factory depreciation should be its floor area, right? So don't become confused. It's floor area. Book value of equipment for equipment, depreciation of equipment and insurance of equipment. But so how we will segregate factory cost? Factory, we take rent factory based on floor area, right? So its cost would be allocated based on floor area. So depreciation of factory would be allocated based on floor space. So production 1 will get depreciation, the portion of factory depreciation is 1 lakh divided by 4,000. So per square meter 25, right?
Yes, sir.
So production 1 will get 30,000. Production 2, 40,000. Service 100,
20,000, sir.
20,000.
20, and service 101, 10,000.
10,000.
So factory repairs and factory office cost will be allocated on the basis of floor space or book value of equipment.
Floor.
Floor space,
Floor
sir.
space. Factory, of course, with floor space, but factory office cost treat as production overhead. Factory office is treated as administrative, not factory. Okay, office treated as administrative. Here already given that factory office cost treat as production overhead. Factory normal office means administrative expense. So administrative expense is related with employee. So we should allocate factory office cost based on number of employees. But if we segregate based on floor space, it will be not wrong, but the most logical is allocate the cost based on number of employees. And depreciation of equipment and insurance equipment, both I think same. If you agree, we can allocate the cost based on the basis of
Book value, sir.
value of equipment. So depreciation of equipment here 80,000. So production department, production 1 will get depreciation amount is total book value of equipment is 80,000, right? And depreciation is also 80,000. So production department will get depreciation
30,000.
30,000. Production 2 will get
20,000,
20,
10,000.
10 and 20. Okay. So let's check here. We segregated factory on the basis of floor area, factory repairs, also floor area, factory office cost, number of employees, equipment, book value of equipment, insurance of equipment, book value of equipment, heating cost, volume of cubic meter, lighting, under floor area, and canteen, number of employees. And these are total cost. Production 1, production 2, service 1, service 2, service 100 and service 100. So these are total cost 5,49,000, and we segregated it 1, 2, 100, 101. These are allocation overhead apportionment. So this is all about our today's class. In next class, please, I am sharing the slides with you, all the 3 slides with you in your inbox. Please download it and go with chapter 3. And if you can complete, I can go first to complete the chapter 3, and we'll start chapter 4 as well. And you can discuss your problems regarding chapter 3 and chapter 2, chapter 3, and chapter 4. If possible, you can go ahead with chapter 4 also. If not possible, please go with chapter 3 with my shared topic. I will definitely discuss with you in the next class. Okay. Chapter 2 already shared. Chapter 1. Chapter 1. Chapter 1, Chapter 2, Chapter 3. Chapter 3. Please check the inbox. I shared chapter 1, 2, 3 slides. Have you got it?
Yes, sir, I got it.
Okay. Can you download it?
Yes, sir.
Okay. So you are requested to go through chapter 1, 2, and 3. If you face any difficulty, please ask me a question. You can give me knock in my WhatsApp number also. I already shared. I don't know you have. I'm again sharing my WhatsApp number. Please give me a knock in my WhatsApp number. I will definitely respond within a quickest possible time. I already shared my WhatsApp number. You can give me knock about your problem regarding study and out of box. You can study. You can ask me question if you face any difficulties for getting your desired farm. If you want to get any admission in your desired farm for articleship, you can ask me. Definitely, if you are not able to get a good farm, I may help you. Definitely, I will try to help you. So you can give me knock with. If you need help about selecting your farm, please share me your CV and your desired farm names or list of CA farms, then I will try to place you in a good farm with your choice. Okay. So don't hesitate to contact with me. I definitely will. I am definitely with you all for study, for examination related help, and for your articleship also. Okay. So keep in touch, inshallah, and put your full effort to complete certificate level as early as possible. I definitely wish your the certificate level will complete with one go. Definitely, I am wishing for you all. Put your full effort, dedication. Inshallah, you can become a chartered accountant within a shortest possible time. My dua is always with you. So, my next, I will be. Hope we will see in next class. Till then, stay safe and stay healthy. Good night. Allah Hafiz for today.